Hey guys, welcome back to Clockwise Crypto. Hope you guys are moving forward in everything that you do. Now today, diving into some news, latest market updates here, looking at Binance. So Binance US says crypto deposits are no longer FDIC insured. The update terms of service for Binance US indicate that users must first convert their dollars to stable coins or crypto before withdrawing. Now, this goes to show you how behind the U.S. is with crypto regulations and any type of clarity. It's a work in progress in the United States. But looking here at this article here, Binance, American entity, informed users today that their crypto holdings with exchanges are no longer FDIC insured. And the email sent to users was seen by Decrypt announced that Binance US has updated their deposit insurance language. So first, Binance US announced that you were able to be insured up to $250 with your fiat currency on Binance. Now, all U.S. deposits are held in a pooled custodial account at multiple banks that are FDIC insured. But now this is changing. So looking here, now they're asking that the exchange's update terms of service now reads, your accounts and digital assets are not eligible for this FDIC insurance protection. A stable coin is a cryptocurrency pegged to fiat. So now they're wanting you, if you want to withdraw, they want you to use fiat. The US, but Binance US did not immediately respond when asked about this, but this is definitely a big shift, guys. And this is a shift really for the United States and where they're at in crypto and you know, the constant battle where you have other countries that are adopting this. You know, the United States is a little bit behind, and we're seeing that. And you know, we're seeing here, you know, crypto and FDIC, the update comes fast on the heels of the FDIC warning individuals that money deposited with a crypto-based financial services provider is not FDIC insured. They say no, that crypto deposits are not insured, reads. And, you know, pretty much FDIC is going on and on about this. And the Federal Trade Commission charged Stephen Elrich, the former CEO of crypto broker Voyager, for falsely claiming that customers' accounts were insured. So pretty much Binance adapted to, you know, what was going on. And, you know, the same thing, the same thing holds true for me. When I'm looking at the exchanges, I see that it's just a place to buy and get it off of there. So I know, you know, there's this saying, not your keys, not your coins, right? Not your keys, not your crypto. The same thing holds true. The main reason for exchanges is for you to buy or sell your holdings and get it off of there. It's just a bridge. It's not somewhere to hold it there. It's not some, you know, unless you're trading in and out, I can understand it. But you have people who are sitting on, I know people sitting on XRP and it's just sitting on the exchange. They don't even put it on their wallet until something happens. And they're saying, oh, well, I lost. Oh, I had 10,000 XRP sitting on Binance and now it's $100 and I can't get it off. You know, they see, you see what happens when a shift occurs, and now all of a sudden you're trying to react versus being proactive and just hold it in your own wallet. Hold it in your own wallet, send it somewhere, and all you need is the address. Every time you buy some, put that address in and send it. You don't even need to see it. So that's kind of my confusion with people that still and I'm talking about people that are hodling long term that still hold their cryptocurrencies on exchanges. We've seen it time and time again where something happens and you're left, oh my God, I need to get it off. I need to move. It's too late. Okay. All it takes is one change in a policy and one change somewhere, and you're just not able to get it, guys. You're not going to be able to grab it. So it's better to just have it in your own wallet where you control. Kind of that's the reason for crypto, providing banking to the unbanked, becoming your own bank. Now, I know it's a big responsibility. There's responsibility that comes with this, but there's also a level of freedom that comes with that as well. So cool article here just for an update. And it's really just showing again where the United States is when it comes to crypto. The United States is seeming like it's a little bit behind in comparison to other countries, and other countries are adopting tech and at least making some type of movement. And we're just, you know, it looks like Only thing I've seen from the United States was a big fight over is XRP as security, right? So instead of trying to see how we can use the tech, right, it's more so, okay, now you just open a bridge for XRP to not be labeled as security, partnering with all the banks around the world, but still not providing any regulatory clarity within in the country that you're serving. So some interesting news there. Going to the next article here, FTX was supposed to have $20 billion in customer crypto. It only held $5 billion. Where did the other $15 billion go? Sam Bankman-Fried is not looking good as I follow this case a little bit. When crypto peaked November 2021, FTX's customers thought they owned around $20 billion in digital assets. But according to expert witness in the same Bankman-Fried criminal trial, which everyone's telling, guys, like, this guy has I haven't seen anyone who's vouching for this guy. But you're saying in the criminal trial that exchanges digital wallets had closer to a quarter of that. So where'd the 15 billion go? That's the question, right? Notre Dame alumni professor of accounting, Peter Easton, who specializes in financial statement analysis, found that FTX's wallets contain close to $1 billion, so missing 15 billion. There's much less money in the crypto wallets, he said, than there should have been. And they're diving through the numbers and diving through the history and looking here. This is not looking good. They're just not looking good. You guys know where my stance is when it comes to SBF. Sorry. I think that he's going to go to a federal camp, maybe a low. And I think if you're white collar, you should, instead of living off of taxpayer dollars, I think you should be working to pay the money back. And that's kind of how I feel about it. And I don't necessarily believe that him being away in a prison is going to help anybody. If anything, the citizens and the citizens of the country are going to be paying for them to live there and live comfortably, to be honest with you. So that's kind of my stance. I think he should be out working and at least paying something back or trying to, So, that's just my idea when it comes to white collar, sentences. So who knows how this is going to go. The former crypto mogul is fighting 7 fraud and conspiracy charges that stem from the collapse of FTX last year. Sam Bankman-Fried is accused of pilfering, I never even heard of that word before, billions of dollars of cash and crypto from his now defunct exchange through Amada Research to spend it as he please. He's pleaded not guilty to all charges. If he does get found guilty, he's going to get roofed. Especially, I think the feds have like a 97% conviction rate. So interesting to see how this plays out. Next article here, Bitcoin ETF will get the nod in 2023 because SEC Gensler needs a win, says Novogratz. So we're seeing what he's saying here. Novogratz says that the SEC could approve spot Bitcoin ETF applications before the end of the year. Now, this is the ETF we want. We don't want any of these futures or anything that's not spot ETFs, because this is actually buying on the blockchain. I'm going to say this time and time again. People are pushing for all these different ETFs to be approved. That's not what we want. We want a spot BTF to be approved because that is actual buys being placed on the blockchain, guys. So love that. He's saying it's going to get approved. He said it happens this year in 2023. He's confident. Galaxy Digital is a financial firm specialized in blockchain digital assets. He's saying the ETF is going to offer investors an affordable, convenient way to bet on the performance of stocks, commodities, and cryptocurrencies. So they're expecting about massive, I think it was about 900 million to be injected into the market as soon as this approval goes. You see what happened earlier this week. You guys saw what happened earlier this week when it was just fake news about it being approved, and everything just shot, skyrocket. People waiting, buy. It just went crazy. I think that the same will happen. I just don't think it'll sustain. I think it'll be the equivalent to when we were looking back on the ETH merge You guys remember the ETH merge when, you know, ETH 2.0 was coming and everyone was anticipating, oh, grab your ETH now, it's going to skyrocket. It pumped maybe like, let's look at the charts. It pumped maybe about $200 or something, and then just splashed. When was this? It was like the ETH merge. Was it earlier this year? It might have been. It pumped and nothing really came about it. Nothing came about of, you know, with it pumping. And I think we'll see the same thing. It was the merge was executed September 15th of 2022. Okay. So when this merge happened, September of 2022, we see here that we have a huge pump, and you can actually go to the daily and see. If we go here to the daily, you see this huge pump, right? And, you know, we saw this pump and it's like, okay, this is going to turn the market, right? And this is going to be something that, you know, September 15th, this is going to be something that we, you know, have a lot of momentum for it. We're going to turn into a bull market, right? I'm looking at this chart. This, hey, nothing happened. September 15th of 2022. There's nothing really happened. It was okay. If anything, it pulled back. Like it was just like nothing crazy happened, guys. So I think we will see something similar. I think there's going to be a rush, but I don't think it's going to have the effect that we're hoping for, unfortunately. And that's just my 2 cents on it. You know, I definitely think that this is still going to play out. I think that we have some time until we're in a traditional bull market, guys. So definitely pay attention to that, because that's something that I'm looking at. I think that, like, we talk about this every day. I think that this holds true. I'm going to stand by this until we break one way or another. And this isn't by coincidence. We have H-bar even about to break through the same level. And it's looking like it's just the bottom's going to fall out. And that's when you need to be ready to accumulate, guys. So definitely pay attention to that, because I am ready. I'm ready to see how this plays out either way, so we can react and respond to what the market's giving us. But guys, hope you got some value out of this video. Keep moving forward in everything that you do, and we'll see you soon.